I'm extremely sorry, these two lines are still there. Anyways, welcome to my channel, my dear friends. My name is Abhilash and I'm your trader next door. In this video, I'll be analyzing the chart of USD JPY, US dollar, Japanese yen. So if you're watching my videos for the first time, then please subscribe to my channel for regular market analysis. And do check out the Forex analysis playlist for the analysis of other currency pairs. And if you're a complete beginner new to Forex trading, then please do not jump blindly before jumping into the Forex trading and risking your hard-earned money. Please have some knowledge about the functioning of the market. If you do not know anything about the market, then please watch these videos. I have uploaded 32 videos you'll find in my YouTube channel, Forex and Stock Learning Course for Beginners. This is a playlist you'll find in my YouTube channel. I have uploaded 32 videos. You'll get a good understanding about the functioning of the market, about the chart patterns, how the market works, indicators, and all. The basic knowledge is very much required. Okay, so before risking your hard-earned money, please watch these videos. That's my request. And if you want to learn from me personally, then you can visit my website abhilashhajarika.com. You'll get all the required information, including my contact details. Okay, so let's jump to the chart then. So this is the chart of USD JPY, and as you can see, market is trading at 108.79. Okay, 108.79. And if you have watched my previous video, then you know it very well that I am still waiting for the market to come down either to this price level or this price level. I've already mentioned in detail why these levels are important. Okay, and if you're looking for a fresh information, then I'll have to repeat again. Okay, listen to me carefully. So right now I'm in the 4 hours time frame. Okay, and if we look at the 4 hours chart, then we can easily see that market was in downtrend. After that, market went up. Market hit this price level, hit this high, then market came down. Okay, it tried to go up again. Okay, just look at this candle. You can easily imagine that bulls were very much in pressure. They tried their best to take the market upward, but they failed. As a result, market started coming down. Okay, and this is a resistance. Okay, and if we look at these price levels, then we can see that okay, we have a support also. Okay, because see 108.33. Whenever market was coming down or going down, this particular level 108.33 level provided support to the market here, and also here. Okay, whenever market was coming down, it was getting support from this particular level. So this level is a valid support to the market, and this level is a resistance. Sorry, this level is a resistance and this level is a support. I don't know where my mind is. Sorry. So this is the support and this is the resistance. Okay, so as I always say, before going for any order or executing any order, we should always look for the area of value. And as you all know, the area of value or the best trading opportunity, the golden spot, is in an uptrend market, it is always near the support. In a downtrend market, the best area of value is always near the resistance, and this market is neither in uptrend nor in downtrend. Okay, this market is in a range. This is a sideways market, so we can go for buy here. Okay, and we can go for sell here, but there is no trading opportunity in the middle, because if you short the market here, okay, if you short the market here, then your stop loss will be around here. Okay, and this stop loss is not that strong. Okay, there is no proper logic here, therefore you should not be messing with the trading discipline. Okay, always wait for the price to come to you. Do not chase the market. Okay, if you go for buy here or sell in the middle, then you are risking. Okay, you're risking your hard-earned money. You're going against the trading discipline. You are not following the proper risk management. You are not following a proper risk to reward ratio. Your risk to reward ratio will only match when you will following a discipline. Your risk to reward ratio will be in your favor if you buy near the resistance, if you buy near the support and sell near the resistance. Okay, therefore we do not have any opportunity here. Okay, because we do not want to risk our hard-earned money here. Therefore we will have to wait for the market to come down either to this level or this level. 109 point, okay, 7, let's say 75 on the upside and 108.33 on the downside. So right now market is trading here. Okay, wait for the market to come down to this particular price level. So once market touches this particular price level, just observe the price. If you see that, just like previous times, market is about to bounce, okay, like this, you will get the confirmation in the form of a hammer or price rejection from below, or a green candle like this. Once you get the confirmation that yes, 108.33 is a valid support, it is a valid support, market is still respecting this level as a support, you can go for a buy order at this level. On the other hand, if market suddenly goes up from here, okay, then just observe the price at this particular level, 109.78 level or 109.7573 level. Okay, just observe the price at this level. If you see that price is struggling, the candles are trembling, okay, it is suffocating. Okay, once you see that price is struggling near the resistance, and if you see that yes, it is about to reverse, okay, you'll get a confirmation in the form of a shooting star, price rejection from above, or red candles like this. Okay, once you get a confirmation that yes, 109.7 is still a valid resistance, then you can short the market. Okay, you can short the market at this resistance. This is your resistance and this is your support. So these two are the trading opportunities for you as of now. And I would like to mention one more thing here. I have already shown in my previous videos. Still, I would like to show you that this level, this resistance is very crucial, because this resistance belongs to the weekly chart. Okay, this is the weekly chart, and as I always say, consulting a higher time frame is very important, because we need to see the bigger picture. We need to see what the big boys, the big players are doing, and to see the bigger picture, this chart is extremely important. And in the weekly chart we can see that market is unable to cross this particular resistance, and this resistance is there in the market since April, second week of April. Okay, therefore this resistance is there in the market for more than one and a half months. Therefore this level is crucial. So there is a good chance that whenever market will be going up, if bulls fail to take the market upward, okay, then market will definitely reverse and you can easily short the market. Okay, so this is the resistance and this is the support. Hopefully you have got the idea right now how you need to trade. This is it. Thank you so much. All the best. Take care.